Hi everyone, my name is Simon Mishevich from Optimize Accountants, and in this video we're going to be talking about budgeting. I know, it's not the most exciting topic to talk about, budgeting. I mean, what is it? But it is one of the most powerful tools that big corporations use to manage their business to grow profitably. And it's one thing that you as a small business owner, or even indeed a medium-sized business owner, should be using in the future. And this is what I'm going to be talking about, is this comparison. Now, this is a Xero report, and I'm going to tell you how to use a budget in a second. If you're using QuickBooks, fine, Intuit, we will show you that as well. But what I want to do here is share with you a report that basically shows you the budget and the actual and the variance. So in this regard, we can see that July, we had income of 14,479, nearly 480, against a budget of 7,000, which is up by nearly 7,500, which is a great turnaround in terms of the business and its budgeting. Probably is a little bit weak if it's that much of a variance. However, the one thing that it will also show you is these costs as well. So you've got advertising costs of 283, which is well within the budget of £3,000. What it's showing you is this kind of thing, where its general expenses 244 and the budget was 120. Now it's all about managing your business. If you create what does this say? A profit of 535. Not sure why you would bother creating a budget for 535. Just close the doors and get a job. But if you have a business where it shows you £5,000 worth of profit, for instance, and you're doing profit of 9,000, that is good, isn't it? It does mean that your budgeting needs reviewing, or that you've got missing costs out of your actual numbers. Whatever it might be, a review is always essential. So what you're looking to do is look line by line and look for your income and then your costs, and then understand where your variances are. But why budget in the first place? Well, the idea behind budgeting is so that you can understand how much money that you'll be making. And in Xero, I'll talk about QuickBooks in a second, but in Xero, you can see, and I'm just going to do a wide view here. In Xero, you can go to accounts, there's accounting, reports, and then under reports, you'll find budget management. And I have to do this every single time because I can never find it. Okay, budget manager, there you go, under financial performance. Click on that and it'll give you this analysis. And what you can do is use this to say, okay, I want to look at the last 6 months, the last 12 months is really hard work. But you can look at doing a budget from April 2023. I mean, that could be anything, couldn't it? It could be, I want to start my budgeting from April 2024. Doesn't make much difference. But what you're looking for is, I'll go back to that because it's got no data historically. Let's go to April 2024, 2023 even. And what I can then do is look at my trend analysis. And I can actually see how much sales I've had. And what that allows you to do is forecasting. So budgeting and forecasting is pretty much for me one and the same. Budgets normally are done once a year and you don't review it. They are a total waste of time. I always used to say that in corporate firms, never use them at all. And people say, well, shareholders, blah, blah, blah. But for management tools, you should use forecast, not budgeting, ever. And what you've got here is that you've got some trends going on, and you can actually start to populate these numbers yourself within a budget. And what that allows you to do is look at your income and expenditures. Now, April 2023 is clearly wrong because there's no expenditure. But what it allows you to do is start populating these numbers in and looking at the net profit line to say, well, how much profit am I going to be making based on the income and expenditure that I put in? Now, when you're first starting a business, you are expected to make a loss because of the amount of investments you'll be making. But over time, that should dissipate and you should be then into profit numbers. If you're not, again, you do have a problem. So make sure you do that. And in Xero, that is relatively easy. In QuickBooks, there's no real difference. You go to the cog at the top, and then on the tools, you'll see this budgeting process, and you just click on Add Budget. And away you go, you start to put that in. So we'll just put a test budget for now. Should put demo budget, but it doesn't matter. And what you can then do is say, yes, I've got all this information I need. And then I can just go next. And straight away, I can start to populate these numbers in here again. But the overall aim of this is to manage your business. If you are not budgeting, you will not know how profitable you are, all the reasons for why you're showing more profit one month than another, or indeed why you're losing money against a budget of, let's say, £5,000, but you make a loss of £7,000. Why is that the case? Budget variance analysis using the profit and loss account in QuickBooks and indeed Xero will allow you to do that. But many business owners do not do this. And then they wonder why they've not made as much money at the end of the year as they anticipated. People that spend a lot of time on their finances will make the most money. I guarantee that. Absolute guarantee that. I mean, yes, you've got the whole idea behind product services being wrong, but those businesses that spend in those same industries, that spend the time to go through the forecast and financial analysis to understand the numbers, will be in a much, much better situation than those that don't.